Welcome to Explain the Charts, where we dive deep into the markets, combining both news and technical analysis to help you make informed trading decisions. Today, September 1st, 2024, we're focusing on USDJPY, a currency pair that's been making headlines recently. The Japanese yen has been showing strength in recent weeks, driven by a shift in sentiment towards the Bank of Japan possibly ending its ultra-loose monetary policy. This is fueled by hot Tokyo annual CPI data, which shows inflation remaining above 3%. However, the dollar is also holding its own, with the U.S. economy showing resilience despite concerns about a possible AI bubble bursting. If we look at the daily chart, we can see a clear upward trend in USDJPY. The pair has been steadily climbing for the past few months, breaking through several resistance levels along the way. This upward trend is likely being fueled by the expectation of a stronger US dollar and possibly a shift in the Bank of Japan's monetary policy. This sentiment is reflected in recent news articles that suggest a potential for the BOJ to raise interest rates, possibly as early as 2024, which would lead to a stronger yen. The dollar has been supported by strong economic data, indicating that the U.S. economy may be able to avoid a recession. However, there are some signs that the upward trend in USDJPY may be nearing its end. The pair has been trading in a relatively tight range for the past few weeks, indicating that the momentum may be fading. The recent decline in the carry trade has also added to the bearish sentiment, as investors have been unwinding their yen-funded investments in higher-yielding assets. Let's zoom in on the 1-hour chart to see what's happening in the short term. We can see that USDJPY has been consolidating around the 146.50 level for the past few days. This indicates that the market is hesitant to move in either direction. There's a high possibility that the pair could see a reversal in the coming days. Looking at the recent price action on the 1-hour chart, we can see a potential bearish signal. The pair has been forming lower highs and lower lows, indicating that the selling pressure is increasing. This is further supported by the recent break below the 146.50 support level. This break suggests that the bulls are losing control, and we could see a further decline in USDJPY. The pair is currently testing the 145.50 support level. This level is a significant support level for the pair, and we could see a rebound if it holds. However, if the pair breaks below this level, it could signal a more significant decline. It is important to consider the news and events to analyze their possible correlations to the chart data. Looking at the 15-minute chart, we can see a clear bearish divergence. The price is making higher highs, while the RSI is making lower highs. This divergence suggests that the bullish momentum is weakening. This divergence is a bearish signal and could signal a further decline in USDJPY. The pair is currently testing the 145.50 support level. If the pair breaks below this level, it could signal a more significant decline in the short term. In summary, USDJPY has been on an upward trend for the past few months, but there are some signs that this trend may be nearing its end. The recent consolidation around the 146.50 level, the bearish divergence on the 15-minute chart, and the break below the 146.50 support level all suggest that the market may be turning bearish. The pair is currently testing the 145.50 support level. This level is a significant support level for the pair, and we could see a rebound if it holds. However, if the pair breaks below this level, it could signal a more significant decline in both the short and long term. It is important to keep an eye on the news and events related to the Bank of Japan and the U.S. economy, as they could have a significant impact on USDJPY. The potential end of the BOJ's ultra-loose monetary policy could strengthen the yen, while a possible AI bubble bursting could weaken the dollar. The market is expected to remain volatile in the coming weeks. It is important to use stop-loss orders to manage your risk and trade only when there is a clear setup.